We begin this week with retail. Walmart's third quarter revenue came in just shy of $125 billion. That was higher than expected. And Maddie, online sales growth for Walmart looking pretty good too.
This is, I think, a situation where you have to step back and put everything in context because the numbers were great. Expectations beat. The 3.4% U.S. comps growth, great compared to certainly other retailers we've seen. And 43% growth in e-commerce sales. Fantastic. The problem with Walmart is that if you look at the overall revenue growth of the company in the quarter, 1.4%. Not exactly inspiring, despite the growth that they're seeing, online. And then, you look at the share of its U.S. e-commerce. And this is according to eMarketer. They've got roughly 4% of total retail e-commerce sales now, and that's up from 3.3% last year. But do you know that Amazon's share this year is 48%, up from 43%? So I almost think, and I hate to say it, but as successful as Walmart has been with what it's doing with the stores, what it's doing online, it's in this perpetual game of catch up now. And I think, and this kind of will speak to other companies we're going to talk to in the show, I think at this point in the economy, with where we are, with where the consumer is, the strongest in 9 years, Walmart was trading for 22 times earnings coming into this. It really had to, I think, knock the ball out, the cover off the ball, and the results were good. It just wasn't fantastic, and so I think that's why there's kind of a tepid, approach to the stock.
Yeah, you look at the stock, Jason. It is actually down this week. Although Maddie touched on other retailers, and yes, Amazon is always looming out there. But when you look at Walmart compared to some of the other retailers that have reported lately, if nothing else, Walmart appears to have at least a little bit of momentum going into the holiday quarter, whereas there are a lot of retailers that just don't.
Yeah, well, I think that's also really partly, at least, the benefit in being a general retailer, right? I mean, you have a little bit of something for everyone. And in Walmart's case, they have a lot of stuff for everyone. And when you look at those retailers that focus on a bit more of a specific market, I mean, let's look at something like Williams and Sonoma, for example. I mean, that good concept, good store, it's a bit more of a specific market. And so they're going to be a little bit more beholden to not only maintaining those numbers, but really keeping that specific market satisfied with new products. Difficult to maintain pricing there. Walmart, just a tremendous focus there. And, I want to refer back to something I saw recently. A friend of ours, Scott Hall, I saw on Twitter, Scott said recently, real pricing power is having the ability to lower prices in the face of your competitors. And I thought that was actually a very interesting way to look at it. I like that a lot because you see something like Walmart, Amazon, they have the ability more or less to do that and really force their competitors' hands, typically smaller competitors. So you got to really give it to Walmart. That scale does help in the space a lot.
Yeah, I think it's a good point because technology is deflationary. So if you can take advantage of that, then you have another source of pricing power. And for Walmart, they have to move online. And I know I've said this a couple times before, but part of what's really difficult is that they're not really getting new customers, really. They're just trying to retain the same customers by adding much more in cost through building their own online website and tons of acquisitions. So they're still in a tough place if they want to become a growth story again, but they've done a good job holding their own.
Now, speaking of the holidays, I will say the one thing they have going for them this year is the fact that this is the first holiday season we go into without Toys R Us around. So in terms of toys, games, and things like that, I think Walmart should see a big boost.
And remember, Target said they were going to make some pretty big investments in square footage to help soak up a little bit of that space that Toys R Us is leaving behind.
Home Depot's third quarter report looked great, and the company raised guidance for the full fiscal year. And somehow, Jason, shares of Home Depot were falling this week.
You're telling me the market wasn't rational, Chris? I mean, come on. Let's remember voting versus weighing, right? So we always have to keep that in mind. But I think it was a very impressive quarter for Home Depot on a number of fronts. We were talking about comps growth there in Home Depot's comps growth in the 5% range. Very impressive. I would encourage investors to not get sucked into the quarterly narrative of concerns over perhaps a slowing home improvement market or a slowing housing market. Focus on the bigger picture data that really, I think, sums it all up. And we're talking about the fact, for example, that by 2020, 54% of U.S. homes will be greater than 40 years old versus 51% in 2016. We all know that aging home base means that they're going to need to be improved upon, and that's Home Depot's specialty. We talk about online sales. Online sales growth with Home Depot is up 28%. They've been able to pass along some product inflation to the consumer, which is nice. Comp average ticket grew 3.5%. They did have a little bit of help from some tough weather a year ago. But to me, I mean, while I think concerns regarding the economy in the near term are fair, I think to assign those concerns to Home Depot's business over the longer haul are of course, a bit short-sighted.
And I'll just say, hearing what Jason said about Home Depot, thinking again about Walmart, I don't know if you guys feel this, but I feel like there is an underlying attitude right now in the stock market about the economy and whether or not where we are in terms of, hey, are things actually going to could things get better from here? Could corporate earnings get better? I mean, the economy is about as good as it can get. If these companies aren't really putting out fantastic numbers, is it worrisome? Are there underlying trends in the market? I don't know.
I feel like we're getting to that sentiment. I feel like we're getting to that point where now it's kind of like, okay, what's your next act? Because if you can't wow me, maybe we got to reset this thing a little bit.
Right.
Yeah, I definitely feel that, and part of it is Walmart, just because of how big that company is, and it was, as you said, it wasn't a great quarter, but it was a very good quarter. Jason, I guess I'm more skeptical than you. I looked at Home Depot's quarter; everything was up. Everything was up. Like, you can get super granular on their quarter, average ticket, overall transactions. I'm dumbfounded that stock was down this week.
More skeptical on the business or the actual the forecast for the market?
No, on the wisdom of the market in the short term.
Well, no, and I think in the short run that probably is spot on. Again, we go back to voting versus weighing, right? Which one do you want what do you use in order to approach investing? And I would use Apple as another great example of a company where right now the market is fairly voting that there are some questions as to whether they can pivot to being a compelling service business. I think the market fairly is questioning whether Home Depot is not going to witness perhaps some harder times here in the near term, and they very well may. But it's still it's the same strong business with a tremendous market opportunity in front. So I think if you're looking at it through the context of 5 years or even longer, I mean, I think this is a compelling business. If the market's selling it, I think investors with a longer time horizon, they need to be looking at this one.